For company introduction, our company is Netflix, and on the website, on Netflix's website for its help page, it states that it's a global entertainment company known for its subscription service that it provides. It provides TV shows, documentaries, movies, and stand-up specials across various genres. Depending on the plan, the user can stream content in different video qualities, HD, Full HD, or Ultra HD, and on multiple devices simultaneously. And Netflix was founded on August 29th, 1997, on a website called BitRan. It states that it initially started as a DVD rental mail-by service, and then began its streaming service in 2007. So the current health of Netflix: are there any current issues, legal proceedings, or litigations? There is one legal proceedings / litigation, which was a class action lawsuit over the Tyson Paul fight. And in a website by Top Class Action, it states that subscribers could not watch the fight properly back in November 2024. And due to these streaming issues and claims of breach of contract and violation of Florida consumer protection laws, they're getting sued. There were other lawsuits, but this was just one of the main ones. Any market risks: estimated to grow its revenue by 12.14% year over year, by article by Jabran Kundi. And the stocks seem okay to buy, but may have a slight risk due to competition from other streaming platforms. For example, Paramount Plus with the World Cup next year, which we know how the last World Cup was. It was like 4 million people watching. And HBO, Hulu, Disney Plus, and many others.
In order to calculate our accounting equation, we need to look at the balance sheet. So this data was pulled from the Netflix office filings with U.S. Securities and Exchange Commissions. So on this slide, we're looking at Netflix's total assets, which are valued at approximately $53.6 billion. So let's break down these key components. First, we have cash and cash equivalents of $7.8 billion. This includes liquid assets, essentially the cash Netflix has on hand or in accessible forms. These are important for covering daily operations and unexpected expenses. Next, we have short-term investments of $1.7 billion. These are investments Netflix can convert into cash within 1 year. Then we have content assets of $32.5 billion. This is the largest category, and it includes Netflix's spendings on licensed and original content. Then we have property and equipment of $1.5 billion. This includes physical assets like studio spaces, office spaces, and production equipment. Then we have other non-current assets of $6.5 billion, and this includes various long-term assets like deferred tax assets and intangible assets. For example, Netflix's software that it uses to record its shows and movies. All right, and then we have total assets highlighted at the bottom, and we conclude with a total assets of $53.6 billion. Next, we are looking at what Netflix owes the company's liabilities. Netflix has content liabilities of $4.3 billion. This represents short-term portions of amounts Netflix owes for licensed content, so payments for shows to be produced. Then we have accounts payable of $899,000. These are basically unpaid bills for services. Then we have accrued expenses of $2.1 billion. So these are what has been incurred but has not yet been paid. And then we have deferred revenue of $1.5 billion, short-term debt of $1.78 billion. So our total current liabilities is $10.7 billion. Next, we also have to take a look at the non-current liabilities, and basically totaled up with non-current liabilities, long-term debt, and other non-current liabilities, we get a total of $18.3 billion. Non-current liabilities is made up of long-term debt other non-current liabilities, and non-current portion of content liabilities, which is just what Netflix owes for content deals that are due in the future. Finally, we're looking at stockholders' equity for Netflix. Netflix has common stock of 6.25 billion, treasury stock of 13.1 billion, and it's negative because it is what Netflix has repurchased from the market. This means that Netflix has been buying back its own stock. Accumulated other comprehensive income, of 362,000, which includes foreign currency adjustments. Just gives us insight into what Netflix has been doing international wise. And finally, retained earnings of 31.3 billion. So we basically get a total of stockholders' equity of 24.7 billion. And then we finally get our accounting equation of total assets of 53.6 billion, and with our liabilities and stockholders' equity added together, we get 53.6 billion. So we see that our accounting equation is in balance.
The results for earnings per share and dividends per share. Earnings per share was $6.61, which is a 25% year-over-year increase. When it came to dividends, Netflix does not pay any dividends. Instead, our company chooses to reinvest its earnings into developing new content, improving its technology, and expanding its presence in international markets. Now we're going to talk about the gross profit margins and current rations for the past 3 years for Netflix. In 2023, we saw 39.53% in gross profits. In 2024, we saw 44.55%. And in 2025 of this year, we saw 46.92%. As you can see, Netflix gross margins has been growing consistently, which suggests that our company is managing its costs more efficiently while also bringing in more revenue each year. Our current ratios for 2023 was 1.12%, 2024 was 1.22%, and 2025 was 1.20%. It did decrease, but it's a reason to that. The current ratio shows how Netflix can pay short-term debts while using short-term assets. A higher ratio than 1 means the company has enough resources to meet its immediate financial obligations as a whole, which is sustainable for our business later on in the future, bringing in large revenue.
Netflix performance has shown significant improvement with an anticipated 12% year-over-year growth. Its net income and operating margins have also increased, reflecting on the company's overall financial health. Because of this upwards trend, our group has decided to invest in Netflix. Its growing revenue and consistent ability to retain subscribers makes it a strong investment for long-term profitability. As Netflix continues to expand its offerings by adding live shows and sports, the company also holds a competitive advantage thanks to its well-known name and investment in original content. These are assets that can be leveraged for future growth, making Netflix the best choice for us.